The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw quartered soybeans relatively mixed on the day on Monday. Wheat was under some pressure. We did alleviate some of the losses, though, into the close. Soybean oil, kind of the same thing, but pressure in both those markets on the day. Monday, mixed activity in livestock after a surge higher in cattle early on the session, and pressure in the outside markets, too, to start a holiday-shortened week. Let's talk about it and get some analysis from John Heimberg with Total Farm Marketing. John, good to catch up with you again this week, and a early pre-happy Thanksgiving to you and yours. And thinking about that, holiday weeks, we know it's going to be a shortened session, nothing on Thursday, Friday, closing just after the noon hour. So I feel like this is one of those weeks, John, where we get plenty of traders. Maybe some odd moves can happen in these markets. What do you think?
Yeah, very much so. When you start getting those holiday weeks, and then where you get some thinner trade, and you'll just see things move around because there's maybe less people to stand in front of a sell move or a buy move in the marketplace. So you kind of got to watch that a little bit with some of the little bit of increased volatility over in the grain side. Though one thing that's a big focus this week, though, will be the fact that December 1st notice day is on Friday. So if anybody's sitting on a long December position, whether corn, whether wheat, they'll need to move out of that position or risk delivery by Friday. Well, that window gets a little closed up, losing Thursday's trade with the holiday, and with a thinner crowd, that could bring some volatility into the markets too. And so we'll have to kind of watch how this week plays out, because seasonally or typically we do see some weakness in the grain markets going through this time period, at least on the corn and wheat side, and then get some bounce after this first notice day. So I'm really watching it fairly closely that maybe this is a window that maybe this market, if we got a correction, 6, 7, 8 cents down on corn, that might be a spot that, if guys want to get a little reownership into the end of the year, might be an opportunity to look at some of those things, just given the historical side, because the demand for corn has stayed fairly good, even though we're a little concerned about some ethanol margins right now.
Yeah, very true. Very true. Well, and I think these markets have continued to be a bit headline driven. Wheat in particular, I'll start there. Obviously, the Russia-Ukraine issues. Sounds like we're getting decent rain in the Black Sea region. A lot of factors really have led to this wheat market taking a downturn the last week plus, and we kind of added to that on Monday's trade, John.
Yeah, and throw in there also the Romania stepping into the export market as a seller, and the offer they put out there was pretty cheap compared to U.S. prices. So, here's another person that's pressuring us in terms of corn competition and wheat competition on the export front. So that's some of, I think, what led to this break in wheat prices today. Throw in the technical side, just kind of taking out that 10-day moving average and just allowing the sellers to kind of take over. And I would say there's probably a decent amount of length in the wheat market, at least in terms of near term, with some of the speculation because of the Ukraine and Russian conflict and maybe some escalation that, maybe this market's got a lot of volatility in it going into that first notice day weekend on December wheat. So we'll have to see how it plays out. Obviously, you see the close today. It's good to see a little bit of money come back off those lows, but still a pretty negative close overall. We got a nearby low that's only a handful of pennies away on that March and that December contract, and obviously the contract low and about another dime down from where we are here. That may be an area that this market wants to go test. But we saw a pretty good break in the dollar as well today, coming off of the highs from Friday. So maybe that trade's starting to get a little long in the tooth, which would be supportive of the commodity space. So we'll have to kind of watch. The wheat market, there's some good stories out there that could provide some support. But at the same time, it still comes down to U.S. demand and can we move our products here? We've seen improved weather conditions. Crop ratings will likely improve again in the HRW belt with today's numbers. And those things are just going to make it concerning for this market that prices really can't go higher because we're just not going to be there in the competitive side of the global market.
I want to talk about soy products as well. That has been a big driver of the soybean trade as a whole here in recent sessions. Palm oil's really taking it on the chin, I know, and that's weighed into soybean oil. We saw bean oil under some pressure again on Monday. Crude down over 2%. I mean, talk about just how products are driving this soy complex right now, John.
And that's really is the driver in the soybean market has been basically soybean oil. To this morning, it was soybean meal. There's a couple things that are really coming into play there. First off, obviously, soybean oil is basically the two rallies we've had since the August low has been lifted by that soybean oil market and its rally strength. Now we saw that market really roll over. Continues to be sold aggressively down another 50 cents a day, but it was down over $1 plus at one time per pound today. So that really is kind of keep a limiting on the bean rally side of it. But with that, one of the main spreads that gets traded out there a lot is soybean meal versus soybean oil. That spread was trading at multi-month lows here just recently. In other words, the strength of oil over meal. And I think we saw that really unwind this morning when all of a sudden soybean meal popped up $7 a ton, and just really kind of gave beans a little bit of a boost. So that's something we kind of got to watch. Typically over history, we always ground the beans for the meal side of it, but now it's the oil side. And, right now you got a soybean oil market that's oversold. You got a soybean meal market that when you look at managed money positions, they have a long position and a short position, of which then we report the net position. Well, they are at their largest short position ever in terms of that net total. So that's got some room for that market to maybe move around. And that could give beans a little bit of push from here into maybe the end of the year. Also, just keep an eye on that South American weather. There were some whispers of some potential dryness brewing in the 10 to 15 day forecast. We have zero weather premium in this market. Not that anything out there was looking strongly detrimental, but maybe a trend a little bit drier after they've had a great start to this, sounds like the South American bean crop.
Yeah, good point there. Good point there. Corn, just looking in at corn a little bit too. You mentioned first notice day coming up Friday. Discord has been testing the 20-day moving average here this end of last weekend on Monday. That feels like our support area right now. I think it's like 422. Just wondering, with Discord so heavily traded, what kind of volatility we could get Tuesday, Wednesday, Friday in that Discord contract this week, John.
Yeah, there's a potential for some things to happen there with first notice day coming, and again losing that day out of there, and to the point the technical side of the market could just kick in and we just see the money flow. As of today, there's still about 270,000 open December positions out there. In terms of the futures now, what side of the coin they're on is the part we don't know. Are they long, they short, that type of thing. Obviously, if they're short the market, they don't have to worry about notice day here because it's just the longs that need to be out or have the risk of potential delivery. So, that could give us some volatility as the week goes. Add to that, typically the basis contracts need to be priced out probably tomorrow, maybe early Wednesday with the holiday coming here on Thursday. So that might be something that comes into play as producers have to make those final decisions. Now, the market's given producers a lot of options. That spread between December and March got down to 8 cents during the day today. So there's really not a lot of risk to move it out to March if they want to do that and stay long the market in terms of that, with their grain. So that's something we'll have to see how that kind of plays out. The front end of the market still stays very supportive. The spreads are saying, hey, we need corn. You're still seeing it in some cash markets for the basis side saying, hey, we still need corn. Whether it's producers locking up, the supply is not there, or even, one thought talking with people today, maybe the supply from last year is not there. Don't forget how conditions were with last growing year, that maybe those numbers are quite not right yet in terms of the overall supply. We may never get that figured out, at least until maybe the grain stocks report in January. But with that right now, at least the front of the corn market still wants to have some ownership to it and is looking for supplies. But the next few days could get extremely volatile. Typically, after a first notice day window, if we do get a bit of a sell-off push, we do see some bounce into the first part of December. Last year in this window, we lost just short of 30 cents over this 4 or 5 day window going into options expiration to first notice day. And then the day after first notice day, we rallied back to the exact same point we were with by the 6th of December. So I'm kind of watching it. If we get a little push here, like I said, it might be a great spot for some guys that want to get a little ownership in to look at those strategies just in case the demand stays hot going into 25.
John Heimberg with Total Farm Marketing joining us here today on the show. Let's go over to livestock, John. cattle trade initially on the day Monday shot higher right at the open, and I think a little news there. We had a cattle on feed report, of course, back on Friday, but then the news that New World screwworm was found in a cow in southern Mexico, and that pushed USDA to restrict all Mexican cattle imports. Seemed like that initially shot us higher, but then we pulled well off of highs. So was that a short-lived headline in the market on the cattle side? What do you think, John?
Very much so. We'll at least have to see how that plays out. I do think that, and just this time of the year, the combination of the report, but which, I'll touch on in just a moment in that regard. Just saw just a pop in the marketplace. I think that had just the shorts hitting some stops, and we rallied up to some pretty major resistance on that January contract, coming within shooting distance of that 260 window. So, to me, we did hit a bit of a topside objective where the market kind of stalled out today. So we'll have to see how next week or the rest of the week goes. Even though we did hold on to at least $1 gains in the feeder side, when you look at the when you look at the cattle and feed report, placements at 105, a little bit heavier than the market anticipated. They look at total cattle on feed, 100% of last year. The real difference is only about 40,000 head over last year. But in the big picture, since 2015, we've only been over 11 million head 3 times on the cattle on the November report. That was 2020, last year at 23, and at 24, obviously this year. So we'll have to see how that plays out, because last year in this window, we were in a spot where the market was sliding as we worked towards our fall/early winter lows since selling off in September. That move today into December, that move today into February live cattle charts is pretty disappointing. To be up that as much as we were, to turn it negative by the end of the day, that's a pretty negative sell signal. I know on that rally this morning, I was quickly moving some things around or getting some defense bought for guys. It just kind of felt like it was a blow off top here type mentality. So we'll see if we get some follow through on that. Key will obviously be cash trade. It'd be very light this week, if any at all, because of the holiday in the middle. Some packers might be picking up some things for, the Friday kill or early next week. But I think those are things that could come into play here. The last thing, I'm just watching with cattle, though, the money's in the long side, 90,000 plus contracts last week. Really no reason to get any less than that in terms of, I would say they're longer even now. That could bring some vulnerability to the cattle market if they want to square up some positions going into the end of the year.
How about the hog trade? A little bit of green there on Monday, but it felt very, compared to cattle, it felt much quieter. Any notes in the hogs?
Yeah, just kind of watch the chart trend in that February contract. Again, here's another market, and funds are sitting well over 120,000 contracts as of last Tuesday that got reported on Friday's COT, or commitment of traders. So let's see if the money stays into this position. That's a record long. Now today, nice little rally to start the day. We failed at the top of that. Looks like we're a little bit short of last week's high, or the most recent high. So now are we starting that pattern of declining highs, which shows me a market that could be getting a little tired and may want to roll over. And with the funds sitting where they are, they easily can walk away from some hog positions and take some air out of this market. So I'm optimistic the hog market here, but I'm obviously a bit on the bearish side just because of the technicals and where we are with the money flow. So again, I love that term, cautiously bearish. So I would take advantage of the value that's in front of you, especially if you got some hogs you got to work with here over the next handful of weeks.
How about that dairy trade? I talked with your colleague Naomi Bloom on Friday, and she mentioned dairy's been an interesting ride to watch here as of late. Any notes from your perspective in dairy here to start the week on Monday?
It's just like we're talking about soybean and products. It's dairy and its products. It's just a driver of price. And unfortunately broke the new contract lows this morning, at least finding a little footing on some strength in the block cheese. Where are we at in the holiday demand? That's my question right now for cheeses. We're still looking at sub 170 a pound on cheese. Milk prices pushing 18 and a half. That still doesn't quite compute together. Throw in a fairly weak butter value as well in this time frame. So I'm still a little concerned that, downside is still here in front of us, at least as we get into the first part of 25 with where the values are. But we've taken a lot of money off this milk chart right now. So maybe we're at a spot where it is oversold enough, could find a bit of a bounce. I know we had a whipsaw action last week on Monday into Tuesday, or during the course of the day, very much like the cattle move that we saw today. where prices exploded out of the gate. By the end of the day, we gave all that back, and we haven't looked back to the upside realistically since that. So again, those types of moves sometimes are just you call them a bull trap, whatever you want to call them, but they can really turn into some negativeness in the marketplace, especially when you can't hold those sharp gains on the start of a session.
John, always appreciate the insight. Final thoughts, anything you want to reiterate to folks just as they're watching the markets here on holiday week?
Again, volatility is going to be a key this week with the shortened trade, the thinner trade overall. We'll have to see how that kind of plays out. If there's some value still out there, make sure you're looking at where your risks are, in that regard. So I know prices aren't where they want them to be or where prices could be, but there's a lot of good value in the market in some places, especially in the livestock side, that making sure some floor is underneath here. Keep your bushels to the long side if you want to stay long in the marketplace. But everything that we're looking at here can very easily quick and turn very negative after the first of the year. So that's something I'm going to be watching, and reassessing where we are with our marketing plans as we get closer to the first of the year. Because if 25 comes in like 24 did in the grain markets, those first couple of days were really rough last year. And I want to make sure we got some coverage in, especially if we get some type of an upward move between now and then.
John, if folks want to reach out and have a conversation there at Total Farm Marketing, what's the best way to get in touch?
Sure, love chat with anybody anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John, always appreciate it. Enjoy the holiday week and Thanksgiving. Hope you get some turkey or turducken if you're into the Madden tradition at all. And appreciate you being on with us. Wishing you and yours a happy Thanksgiving again. We'll talk to you next week.
Sounds great. Happy Thanksgiving, everyone, and talk to you next week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.